So folks are coming in.
So you have a Thomas Sowell quote.
I do. That is the logo of our center here, the Salem Center for Policy. That's what we do. We focus on these issues. Any issues that's a great quote to think by. Remind us of that for sure. Happy to send you a I'll send you a T-shirt on that. If you
please.
You recognize the quote, you get a T-shirt.
Okay, thanks.
Excellent. All right, I think that is probably enough time to let folks come in. Hi, everyone, and welcome to another Salem Center event. We're happy today to have Bruce Meyer from the University of Chicago, where he is the McCormick Foundation Professor at the Harris School of Public Policy. Bruce studies poverty and inequality, tax policy, government safety net programs as an employment insurance, compensations, food stamps, Medicaid, etc. And he's joined us today to talk about his recent work on developing new poverty measures, and you explain to us where that work is coming from. And anyway, Bruce, it's a pleasure to have you here. Thanks for joining us.
Thank you, Carlos. Thank you for having me. Let me share my screen, and I'm gonna get this started. So can you see the presentation?
Yes.
Okay, good. So the work that I'm going to talk about is the work of over 25 people on a federal working group spread across 11 agencies. The background research that I'm also going to talk about is the work of the Comprehensive Income Dataset Project staff, we call it the KID, and also many co-authors. What I'm going to say is not the views of the Census Bureau. You might wonder why a University of Chicago professor is going to tell you about a federal committee that he co-chaired. But for 3 years, I was a part-time census employee starting in February 2018. I had served on the Evidence-Based Policymaking Commission, which produced a bill called the Evidence Act of 2018 that was signed into law in 2019. And the former director of the Census Bureau called it the most important thing that has happened for data for the common good in his lifetime. It's kind of not widely known, but it makes data more available for research, and it protects data better and encourages federal agencies to evaluate their programs. A fellow commissioner on this federal commission was Nancy Potok, who had been appointed as chief statistician in the Obama administration. I know this is getting involved, and you might wonder what the chief statistician is, or even might wonder about why we even have one. You might not have known that we do. When I told my brother that we have a chief statistician, he asked why it's not statistician general or statistician laureate. He always likes to tease. But the chief statistician is responsible for coordinating the many statistical agencies. And the US has 130 statistical agencies at the federal level. 13 are considered principal, including the Census Bureau and the Bureau of Labor Statistics. Well, I went to see the chief statistician in her office in the executive office building and suggested that we could measure poverty better than we currently do. About 6 months later, no good deed goes unpunished, and I was asked to co-chair this committee that was evaluating how we measure poverty and suggesting new alternatives. The report that I'm going to describe really has recommendations, but in the ways of the federal government, these recommendations are likely to be implemented because they fall in a gray area between recommendations and decisions. The people who would be responsible for implementing the recommendations were part of the committee, in particular, representatives from the Census Bureau and the Bureau of Labor Statistics. So the background for this report is that there is a lot of evidence that the surveys that we rely on to measure poverty have a lot of underreporting of various kinds of income, in particular transfers, so social insurance and welfare payments, and surprisingly, even pensions. Private pensions are badly reported in most of our household surveys, with about half of pension income not reported. There's also been some other trends in recent years, improved availability and understanding of administrative data, and some evidence that poverty could be well measured by consumption data, and that the measures using consumption often are better validated in terms of corresponding more to other indicators of material deprivation than income measures. So let me show you some of the evidence on what I just said. So here is a figure that shows you the proportional bias in reports of 4 different transfer programs, TANF being our main cash welfare program, SNAP, another name for food stamps, SSDI is disability insurance, and UI is unemployment insurance. This figure shows that the surveys, and let's focus on the current population survey, or CPS bars in pink, those indicate, say in the case of TANF, that half of TANF is not recorded in the survey. And in the case of SNAP, 42% of benefits aren't recorded in the survey. So this is pretty dramatic understatement of certain kinds of income in our main surveys, the CPS being the source of official poverty statistics. Now, you might wonder if there are other problems with our household surveys. And the biggest problem really seems to be underreporting of income, that our surveys tend to do a pretty good job of capturing the population that we'd want to be interviewing to measure poverty. So what this figure shows, and focusing, say, on the CPS results in green, says that if you take food stamp or SNAP records and link them to the current population survey, and you do that to see if food stamp recipients show up in the survey, and you need to apply the appropriate weights that come along with the survey, you find that 95% of the people that you expect should show up in the survey do, in fact, appear there. So that's not perfect, but it's only a 5% share of SNAP recipients, which are a good proxy for the poor, SNAP being our largest transfer program in terms of the number of low-income people reached. This just shows that the survey does a pretty good job of capturing the relevant population. The problem is once you interview these individuals, a lot of people aren't willing to tell you about their income, and you understate their income quite dramatically. So if you instead of just relying on the survey reports, you bring in administrative data and you link it at the individual level to the survey records, which we can do at the Census Bureau or at a research data center. And the records that we analyze have been anonymized so that we're not actually looking at any names or addresses. The administrative data and the survey reports are joined using anonymous codes. When we do that, we see that using almost any measure of poverty, and this figure shows you various measures looking just at pre-tax cash income, accounting for taxes in the next set of bars, and then accounting for in-kind transfers like housing benefits and SNAP. And then finally, in this figure, we account for a flow value of income for those who own a home or a car. If you own a home, you don't have to pay rent. Most relevantly, if you own it outright, so you're not even paying a mortgage, you essentially get the flow of resources that's akin to a rental value in the form of income. So this figure shows various measures of income poverty, and the maroon uses just survey data. The gray combines the administrative data with the survey data. And you can see that the share of people below official poverty cutoffs is often much lower when you use the combined survey and administrative data. So administrative data, which has become more available, can be successfully incorporated with our surveys, and it changes our understanding of the poverty level. Now, it also changes our understanding of the poverty reduction of government programs. Policymakers and researchers often use poverty measures to assess the effects and targeting of government benefits. The poverty reduction of many programs, it turns out, is sharply understated by existing income poverty measures. When we, in this figure, look at how much higher poverty would be without various programs, we see much larger effects of many programs with the combined survey and administrative data than we do with the survey data alone. So the maroon bars here come from a Census Bureau report. The gray ones are what we get when we combine the survey and administrative data that I described just a few minutes ago. And you can see that many programs have their poverty reduction sharply understated with existing survey data alone. For example, SNAP, the survey data alone say the poverty reduction is about 11%. So 11% of people would be poor, 11% more would be poor if we did not have the SNAP program. But if you use the administrative data combined with the survey data, it's 25% more people would be poor if you didn't have the SNAP program. And that's because SNAP benefits are so underreported in our surveys. About half of them aren't registered in our surveys. And the administrative data in this analysis here is also used to figure out who's originally poor in the first place before you do the experiment of potentially removing the SNAP program. So both of those changes to the calculation affect the number here. And you can see that it's not just SNAP that is understated in terms of its poverty reduction. Housing benefits and SSI, short for supplemental security income for the aged and disabled, is also dramatically understated, and its effect understated using survey data alone. An additional motivation for this committee was the finding that consumption data seems to better identify the most deprived in the population than income data. And what we did in a paper, Jim Sullivan and I, almost 10 years ago, we looked at a number of measures of deprivation. And we looked at whether, when you classify people as poor using consumption data, you got a more deprived population of poor individuals than when you define poverty based on income. And we didn't find uniform support for consumption doing a better job of capturing well-being, but a majority of the indicators that you can see in this table, like measures of education or health or characteristics of a person's home, those tended to be worse for those defined as consumption poor, those defined as income poor. And we think of the goal of poverty measurement as identifying those who are most deprived. So this analysis tended to indicate that consumption did a better job of capturing poverty than income. So there were other motivations for revising poverty measurement. It's been 25 years since a National Academy of Sciences report that's considered a landmark report on poverty measurement came out. And that report was an important advance at the time, and it eventually led to a new poverty measure that the Census Bureau produces called the Supplemental Poverty Measure, which most people take to be our best available measure of poverty these days, rather than the official measure, which doesn't account for taxes, doesn't account for in-kind transfers, which are the main things that we've done to reduce poverty over the last 30 or 40 years. There are, however, drawbacks to this measure, alternative measure that the Census Bureau produces. It's fairly complicated and hard to understand. it has some quite arbitrary elements to its cutoffs under which you're called poor. It has an ad hoc treatment of housing status. There's no, it doesn't put people in different housing statuses on the same playing field. And it also, this supplemental poverty measure, it has an odd treatment of health insurance. It mostly ignores health insurance and medical costs, but for someone who gains health insurance but pays a positive amount for the insurance when they gain that health insurance, this measure would say that such a person is worse off, even if they gained wonderful health insurance. If they paid a penny for it, this measure would consider them to be worse off. So that's a real drawback in a period like the past 10 years and maybe going forward, where the extent to which people are covered by government health insurance changes dramatically. So the charter of this working group was to consider whether alternative measures of poverty could be produced and should be produced, and what those would look like. The idea was that these new measures would supplement, not replace, existing measures. The group was established by the chief statistician that I mentioned earlier, and there were subject matter experts from 11 agencies on this working group. Everybody was a career agency member, not a political appointee. The co-chairs were Carrie Leslie from the Statistical Policy Office in the Office of Information and Regulatory Affairs. That's where the chief statistician sits, and myself as a representative from Census. We had 46 meetings of at least 2 hours in length over a 2-year period. It was fairly grueling. We got to know each other very well. The interim report came out last year in February. We received about 20,000 comments. Now, most of those comments, and anyone who's worked on regulatory actions in the federal government will tell you that you get a lot of form comments and a lot of comments that aren't substantive, and that was true with our report. So most of the comments were that people wanted more time. People were given 60 days to comment, but this report came out just before the start of the pandemic. So people were not surprisingly busy with adjusting to all the changes that the pandemic wrought. So we let people submit comments beyond the 60-day deadline, and we did get a lot of substantive comments, which are summarized in the report, and we also described what we did relative to those comments. Our final report came out earlier this year, and here's the table of contents. It's almost 130 pages long and covers a lot of ground. Let me tell you what we recommended. we were able to agree on many things. The report was a consensus report, so that we all signed on to it. But there were some details that we couldn't fill out. So there was a process described in the report to complete some of the details of the poverty measures, in particular, exactly what the cutoffs would be below which you're declared poor. We spent most of our time on what are called the resource measures, or often those be just one resource measure. And the resource measure is what you compare to a threshold. And when the resource measure is below the threshold, you're called poor. And we recommended that there be two different resource measures. One that would be based on income, but would combine administrative data with the survey reports. And this is a new thing because there aren't federal statistics that use surveys that combine their information with administrative data in this way. So an important aspect of this report is that it moves the use of administrative data, which is a way of correcting a lot of errors in survey reports. It moves it to the fore. So that was our first resource measure that we recommended, one that combines income reports from surveys with administrative data from program welfare and social insurance programs. Second resource measure was a consumption measure based on the consumer expenditure survey, combining the information in the expenditure survey with a much more limited array of administrative data. We also had a number of recommendations that applied to both of these income and consumption resource measures. We talked briefly about thresholds and future research. So let me talk about the income measure. So we recommended that we continue to use the current survey that's used to measure income for poverty and income distribution purposes in the US, the Current Population Survey Annual Social and Economic Supplement. We recommended adjusting for taxes and including in-kind benefits because it's disposable income that really generates well-being. You can't spend what is taxed away. And credits like the Earned Income Tax Credit and the Child Tax Credit are major anti-poverty efforts that we want to account for. There also are a lot of in-kind benefits like food stamps and housing benefits that are key programs for reducing poverty, and you'd want to account for those as well. We recommended linking administrative data to replace survey values with administrative values when there's evidence that the survey reports tend to badly capture, often understate, the receipt of programs or earnings or various other kinds of income like pension income. We recommended that the default approach should be to just substitute the administrative data for the survey data when supported by research, but more complicated approaches will often be needed, in part because current administrative data are often incomplete, not reaching. We currently don't have data for all states for some programs like SNAP and TANF. So one would have to predict values for those states that don't have administrative data to substitute for the survey reports. We recommended strengthening data sharing across government agencies to facilitate the production of these income statistics and other statistics that the federal government produces. In terms of consumption, we recommended using the Consumer Expenditure Survey produced by the BLS as a source of expenditure data, and constructing a poverty measure that's based on, instead of income, what people are in fact able to spend on food, housing, clothing, and other goods and services. And that provides a more direct way of looking at people's living standards. We recommended that eventually the BLS produce such a consumption-based poverty measure at the state level, but in the interim produced one at the census division level. There are 4 census divisions, and recommendation was to produce poverty measures at the division level. I'm sorry, I think it's actually 9 divisions, 4 regions. We also recommended that administrative data be incorporated when appropriate. For example, we have good administrative data on public and subsidized housing benefits that can be incorporated with the Consumer Expenditure Survey rather than relying on individuals' reports of the value of their housing benefits. We had several recommendations for how to measure resources when people are potentially getting health benefits or health insurance. And we recommended that the federal government construct measures with and without health insurance. That's because we had to get everyone to agree. This was a consensus working group, and everybody recognized that you want to account for health insurance because it's a very valuable in-kind benefit when either provided by your employer or provided by the federal government in the form of Medicaid or Medicare or veterans' health insurance benefits. And ignoring health insurance seems like an important omission, but there was also a lot of recognition that low-income individuals may not value health insurance at its full cost. So what we settled on is that the federal government should produce measures including and excluding so that you can see the effect in both cases, and that the value of health insurance should be capped at a share of total resources, so that someone couldn't be made non-poor, lifted above the poverty threshold just from having health insurance. So it was kind of a middle ground, a compromise to include the value of health insurance, but cap it at a share of total resources. We recommended that in the interim, before everyone could agree on a set of cutoffs below which you were declared poor, we would use some interim thresholds, because we felt that the group knew enough about how to measure resources, and that would lead to a substantial improvement in how we measure poverty, and we could just use interim thresholds that might not be what everyone was completely happy with. So we argued that final thresholds would require additional research and additional discussion. But we felt that we had come up with measures of consumption and income using administrative data as well as survey data that would make a substantial improvement in identifying who's poor, so that those should be applied immediately. One issue that we failed to agree on, and that is whether or not you should adjust thresholds for local prices. And there's a very strong intuitive argument that you would want cutoffs to be, poverty threshold cutoffs to be higher in areas with, say, high housing costs like New York or San Francisco than you would in rural areas in the South, say. But there's also the standard economic argument that you get what you pay for, and part of the reason housing may be more expensive in California or New York is people want to live there for other characteristics, other amenities of the area that they get. We also, and this is work out of the Comprehensive Income Dataset Project, we also looked at some evidence that indicates that when you geographically adjust poverty thresholds, so when you make them higher in New York and California than in rural areas, for example, you tend to identify a group of people as being poor who are better off. So that's the opposite of what you would hope to do with a change to the poverty thresholds. And so what this figure shows is that it shows different domains to well-being that we looked at, and it shows the number of indicators that that show that a geographically adjusted poor population would be more deprived and the number that showed that a geographically adjusted poor population would be less deprived. And you can see that more are to the left, which indicates less deprived, which is the opposite of what you would hope the geographic adjustment would do. So, so we had sort of conflicting intuitive arguments and some evidence that suggested that geographic adjustments did not do what you would hope them to do. So we were unable to recommend a specific approach there. So we also made some recommendations on future research. There were a lot of people on the working group who recognized that one indicator, income or consumption, might not be enough to really characterize who is deprived. So we recommended that future work and that more a later group of federal officials examine the possibility of the US government producing a multidimensional poverty measure that would look at things like health or education besides income and consumption. We noted that current measures of poverty do not incorporate the homeless, and that it would be good to, one, make that more clear in government reports, and then do other analyses to document the plight of the homeless. We also noted that current poverty statistics are not timely at all. We won't have any official numbers on poverty during the pandemic, during last year even, until September of this year. And that means that we won't have any official measures that can be used to guide policy in a situation like the pandemic. So we recommended that future work at the federal level include how to come up with timely poverty measures. So let me conclude just to give a little bit of commentary. The recommendations by encouraging the use of administrative data by the federal government in producing poverty measures would in general make administrative data more available for other statistical analyses and for research, which is a hugely important side benefit of a new poverty measure that combines survey and administrative data, because it's not only for poverty measurement that the decline in the quality of survey evidence in our main surveys leads to bad evidence and bad policy making. So let me stop there and take any questions.
All right, thanks, Bruce. Let me make sure that everybody here has a chance to type either in the Q&A or if you want to ask a question, raise your hand. I see Ehud already has his hand up. And Ehud, wait a second. Let me ask a question first to Bruce here. And I'm dying to ask this question. I've been following your work for a long time, Bruce, just because I teach a lot to our students, and especially undergraduates, how to look at data to understand the effect of policies and how difficult it is for measurement is a super difficult thing, right? So I use a lot of your examples and papers in those classes. And one thing that, correct me if I'm wrong, in the measures that you're proposing right now, you showed us a slide in the beginning that basically shows that there's a disparity in the way we think about the percentage of people that are poor in the country. That if you use surveyed only data, you could say it's 12% or all the way down to 6%, which, this is a difference of what? Something like 50 million people, right? So this is a huge difference between the way definition of poverty would take place depending on how one measures things. So this is not saying what's right or wrong, just showing how difficult it is for us to make decisions based on data, given that it's so hard to measure some of those things. The question I want to ask is that we've seen in economics in the past maybe 10 or 15 years an enormous emphasis on the idea of inequality. And again, to talk about inequality, we need to measure, and measurement that is also very difficult. What is your sort of take on the impact of this consumption-based measures that you work with in sort of like modifying or coloring a little bit the sort of narrative that we have around inequality in the past, in the profession, in the past, let's say, 10 years or so?
Well, I think it's clear that when you use consumption data and look at what people are able to buy in terms of food and clothing and housing, that inequality has not increased nearly as much over the past 40 years. And you really don't see much of an increase in the last 30 years at all in the bulk of the population. Now, we don't have consumption data that can allow you to look at the top 10th of 1% or really even the top 1%. And so the consumption data don't really bear on the very top tail of the distribution. But when you look at consumption data, you see much less increase in inequality. And significant part of that is because there's so much underreporting of income at the bottom. And, it's not because people are trying to be devious or hide illegal behavior, or it's that people are just oversurveyed, and income is a sensitive topic, and they just say, when asked if they get income from a given source, they just say, I didn't get any from that source. And in truth, the interviewers are also very busy and often go through the surveys quickly and don't take the time to elicit complete responses. So the result is that, particularly at the bottom, it appears that there's much more inequality if you rely on income, but if you look at what people are able to actually purchase, there's less inequality at a point in time, and it's gone up much less over the past 40 years than income inequality.
Professor Ron, go ahead.
Thank you, Bruce. My question follows up a little bit on Carlos's, and maybe above your purview, but let me ask it anyway. If we were to use supplemental poverty measures or consumption-based measures, how would federal policies actually change?
Sure. So at this point, the proposal is to just produce these measures for to understand the extent of poverty and to understand who is poor, not to use these measures to determine eligibility for programs. I would argue that we would realize that our programs are doing a better job of reducing poverty than they are given credit for doing. And we would conclude that fewer people are falling through holes in the safety net, so that, for example, there have been, I've seen reports saying that a very low share of the unemployed in the pandemic received unemployment insurance. And that's based on survey reports of asking people who are unemployed, did you receive unemployment insurance? But we know that people do not do a good job of answering that kind of question. So we would conclude that unemployment insurance in the pandemic is reaching a larger share of people than many papers seem to report. And we would, I think, be probably less worried about potential failures of the program, but also realize that they are more important because they're reaching more people than is stated at face value by our statistics.
All right, anybody has any other question? I have another one here. How difficult it is to make the adjustments of the administrative data to bring in consumption-based measures to measure poverty, to go back in time and think about the time series of it. Is it something that, how far back can we go, in other words, right? A lot of this effort has started with Lyndon Johnson's War on Poverty. A lot of the measures of poverty line started around that time, right? Can we go back and think about the poverty line and remeasure things all the way back, or is it difficult to do that?
Well, it's fairly difficult to do it accurately. Our consumption data was irregular until the early 1980s. So we have a couple, there was a survey in the early 60s and another one in the early 70s, but not every year. So, and there were some changes in how the survey was done and what information was collected. So it can't be done as accurately as one would like. And for income, we're not going to be able to correct old surveys for misreporting of various sources of income, but there was less misreporting back in the 60s and 70s. So it's less of a problem, but it's still there. So we can do it, but not as reliably as we would like. Now, I'd argue that poverty back in the 60s was a completely different thing. Back then, you worried about people not having running water and not full bathroom facilities, and you worried about people not having sufficient calories. Today, obesity is a bigger issue than malnutrition, and 90% of those in the bottom 20% of the income distribution have air conditioning, either room or central air. So what it means to be poor is completely different now than it was in the 60s. And it's not clear you'd want to apply the same measure all the way back then. So I think that's a drawback, that these new measures could not be used all the way back then, but it's not clear that you'd want to do that, because poverty was quite different back in 1964 when the war on poverty was started.
Yeah, I think that is an interesting aspect of it, because the notion of talking about the poor, it's a abstract concept that is also relative, and also I'm from Brazil originally, and 20 years ago when I moved here, the notion of poverty that I had in my mind is very different than the notion of poverty that maybe folks here would have, right? And so not only back in time, but today, even if I go back and visit my family, what is poverty around them is something very different than what's poverty around us. So it's definitely not an absolute thing, right? Which makes it even harder to measure appropriately and to think, are we addressing the right things or not? Okay, so let's see, anybody else in the audience? And so one of the plots you had that I found interesting was the one that reduction in poverty per program when looking at the different measures. So you had like, I think you mentioned SNAP going down something like 25% reduction in poverty, as opposed to like 15% as currently based on survey data. Do you, from that analysis, did you find anything in terms of relative sense of the effectiveness of the programs? Is there any program that shows up as being, after adjusting for the consumption scale, being more effective than we previously thought?
Well, quite a few programs turn out to be more effective. So SNAP and housing benefits reach many more people than you would get from the survey data alone. It's also true for some of the tax credits that are in the news. The earned income tax credit and the child tax credit reach more people than the survey data indicate. So, there's some news here that I think liberals would like, and some news here that conservatives would like. I think it's clear that there are fewer people who have income below official poverty cutoffs, but one of the main reasons why that's true is that our poverty reduction efforts have been more effective than is currently advertised.
Yeah, I was thinking more in the sense that if you were to prioritize them, if you were to focus more efforts, which ones are, have the highest derivative, I suppose. That's in reducing things.
That is a good question, and we haven't put the programs on a common scale to do that, to say, and that's a good idea. We should do that, whether $1 spent on SNAP is more effective than $1 spent on an earned income tax credit or SSI. And that really would be a good next step.
I guess that only applies in a world where we have trade-offs, and currently, I guess we have no budgetary constraints. So let's put money everywhere, right?
It does seem to be the current approach.
That's right. Bruce, it's getting to 5 o'clock. Thank you so much again. This was wonderful. And I'm definitely going to make my students watch this in this coming semester. So thank you for helping me teaching my classes in the near future.
It's been a pleasure.